Well, guys, it's official. In the last 3 months, I have closed on not one, but 2 commercial properties. What's up, guys? It's McKeown back again with another video this week, and this week's video is going to be discussing commercial construction loans. Now, this is a question I got asked last week when I closed on my cabin, and how exactly construction loans work. Over the last 6 months, I've been working towards closing on 2 different commercial properties, one that required the sale of my 4-plex in order to purchase this commercial building, which was a construction loan as well as the cabin construction loan that just closed last week after the sale of my duplex finally going through. Now, the reason why I wanted to discuss this with you guys is because I can honestly say these 2 construction loans have by far improved my overall net worth more than any other property or any other loan has thus far. Now, yes, I have my duplex and my quad that appreciated substantially over the course of 4 years for one and 2.5 years for the other, but as far as one particular loan that was able to roll in the costs and just overall be a very, very productive loan for me has been these 2 construction loans. Now, when I discuss construction loan, a lot of you guys may, especially myself, 6 months ago, have never even entertained this idea or maybe never even heard of it. I'll give you a quick rundown. So both of these situations were commercial loans, meaning that they were 20-year notes rather than your traditional 30-year note. So your mortgage will be higher. Now, on top of that, construction loans are basically in the build process. Let's use my cabin, for example. Obviously, the cabin's not built yet. The builder needs to have the funds from the bank kind of distributed over time in order to purchase the material as well as purchase other needed items to build the cabin. So in this case, I just got distributed 20% of the overall build, and that was deposited to my builder. Once you get to a certain stage, that additional amount, maybe another 20%, will be deposited to the builder, and over time, eventually the builder, by the end of the completion of the cabin, will have been paid the entire build job. But the good thing about a construction loan was I didn't have to purchase the land and then also contract a builder and have a separate transaction with the builder. So in this case, I was actually able to have the lot and the build job in one loan. The main reason and the pro for this was I was using a 1031 exchange. Now, a 1031 exchange requires that the loan gets actually completed within 180 days. Now, let's say you go out to a residential builder and you want to buy a house and you decide to pick a lot and have that builder build it over time that may have a 10, 12, or 14-month build time frame. Well, that 10, 12, or 14-month build time, you're not going to be able to close on the house or close on the loan until the actual job is complete. Now, in this case, I was actually able to close completely on the loan. The bank lended me the entire cost of the land and the build job, and just over time, that builder is going to receive money and compensation from the bank. I'm not going to have to worry about that 180 days anymore when it comes to the 1031 exchange. Now, let's use my office construction loan. Again, commercial construction loan, 20-year note. The 2 loans were actually a little bit different, and I'll explain to you guys in a second just exactly how they differ, but this still was a construction commercial loan at the end of the day. Now, this is a 4-unit commercial space. On the other side of this wall is unit 3, and I have an additional unit 4 as well, both that are tenant occupied, paying me rent, and this particular unit is unit 2. Unit 2 and unit 1 are conjoined to make my real estate company's office. Now, the reason why this was a construction commercial loan rather than just a commercial loan to begin with, again, a 4-unit office space could have easily just been a commercial loan. When I initially viewed this, I loved the opportunity with other tenants paying me my mortgage. So the issue with this particular property was the units are severely dated, especially the 2 units that I wanted to occupy. I wanted my office to be nice, new, modern, and fresh for folks to come in here, whether it be for closings, whether it be the agents in my office, the staff in my office. I just wanted a nice new place that was open and transparent to the public. So what does that mean? That means either A, I was going to have to fork up a substantial amount of money to remodel this entire place, which with the expenses of running a real estate company, I highly suggest you never own a real estate company. I'm just kidding. But the cost of running a business is not cheap. Okay, the cost of this remodel was close to $160,000, and unfortunately, that's not funds that I just had laying around for me to want to remodel. So going back to a construction commercial loan, I was able to roll that $160,000 of remodeling cost into the loan, so it was no money out of pocket, and instead, I basically pay that cost over the course of the next 20 years with my mortgage. And on top of that, both in the build job with my cabin as well as the remodel here with the office space, I can tell you by rolling in the build job as well as rolling in the remodel cost here for this office space, created a substantial amount of equity for me. Just to give you an idea in quick numbers, this particular property, I made about $150,000 in equity just by doing a construction commercial loan and rolling the cost into this actual purchase. And my cabin was even better. I was able to create almost $250,000 in equity by being able to roll the cost of the build job into the actual note with the land. So a lot of people talk on the residential side in terms of value add opportunities. Value add opportunities meaning, hey, I want to purchase a single family home that hasn't been updated since the 70s or 80s. I'm going to buy it at a discount and be able to remodel it. And then maybe I can refinance and take all the cash out. If you've heard of it, it's called the BRRRR method. It's very, very difficult, especially in the Dallas-Fort Worth market. Instead, I've kind of jumped across the ship and gone to the commercial side of things. Not necessarily doing the BRRRR method when it comes to commercial properties, but on the flip side, I've now been kind of remodeling, or in the other sense, building a cabin from scratch in order to build equity and grow my net worth. Now, a construction commercial loan is not something that you're gonna go out day one, jump into real estate investing and do firsthand, but this is something that you can definitely, and to give you guys an example, it took me about 5 years before I actually closed on my first commercial loan, which in this case was a construction loan. But if you start off with residential and grow yourself to the point where you wanna jump into commercial loans, a construction commercial loan is a great asset. So commercial construction loan, how does the process work? I can tell you guys, first things first, you need to have valid income. It's still gonna be the same way you qualify for residential transactions. Technically, commercial is gonna be a little bit lighter, but you're gonna have to have, especially if you're self-employed, me particularly, I was self-employed as well, you need to have 2 years of tax returns showing profit. Now, I've mentioned this in videos before. If you're self-employed, you file taxes, you never pay taxes because you write everything off, your business is not gonna show profit, which means you're not gonna be able to qualify for any residential loan, especially not when it comes to commercial. Now, there are loopholes when it comes to that, but I highly suggest you speak to your accountant or CPA before you do anything. But my company itself shows profit, as well as I have a substantial salary that my company pays as well. So a combined amount of the profit my company makes plus my salary was how I was able to qualify for both of these properties. Now, I can tell you the second property almost fell through, my cabin, because I've not filed my 2021 taxes. I'll be doing that in the next 30 days, but they used my 2019 and 2020 taxes. And I also tried to bring less to closing than I initially planned on, because going back to the whole unfortunate event of selling my duplex, I took a second contract rather than the first contract that fell through, so the amount of money that I was actually bringing to closing was less. And the week closing, they basically said you need to actually come up with the initial amount you put down because your taxes don't support enough income to be able to qualify for this cabin. If you've watched my previous video, I came up with that and I closed last week, but just some caveat, guys, here for you. Make sure you're filing your taxes correctly, especially if you are self-employed. Now, on the financing side of things, it's still the same process when it comes to residential lending. You're still gonna have to get an appraisal, and the appraisal is still going to have to meet value or succeed value in order to lend you the appropriate funds. So first things first, getting pre-qualified and making sure that the amount that you're looking to purchase on the construction commercial side of things is going to return you enough money based on the amount of money you're putting down, as well as the return that the property is going to give you. For instance, if you're looking for a $5 million property that's commercial, that's going to return you $5,000 a month, I'm telling you that's horrible. You're likely not going to get approved for any kind of loan regardless of what you actually make, because the return is too minimal. Again, you're wanting to find a commercial property that you can actually get profit from. And profit from meaning that you're going to take that construction loan, go do something to the commercial building or commercial office space or build job, and actually create equity in the process of doing so. Again, that goes back to a value add opportunity. Now, finding a deal on the commercial side is a little bit more difficult. To be honest with you, this commercial property had been sitting on the market for almost a year before I actually negotiated substantially on it and was able to contract it at a price that made sense. When it comes to my cabin, that was just meeting with the builder, getting an idea of where the market was, finding a lot that made sense, as well as finding a premium lot that's going to attract additional people for rental purposes, but also finding a good builder that's going to be able to do it at a decent price, with the prices increasing as much as they are in Broken Bow. My suggestion on the find the deal process is make sure that you're connected with a local agent that's going to be able to help you. Fortunately enough, in this situation, I am an agent in the Dallas-Fort Worth area, so I was able to help myself. And a lot of the education and knowledge when it came to Broken Bow was me doing a lot of the work myself. But the biggest thing is the appraisal. I know on the residential side of things, a lot of people are just paying above valued price, meaning if it appraised for $300 and they offered $350, they would just be covering that $50,000 difference. Now, the fortunate side of commercial right now is both of these commercial properties with my construction loan actually appraised higher than my contract price. And that just means that I'm building equity with little to no work. The work really is the builder, in this case, building my cabin. I'm not doing any work. The cabin's just being built. Now, the work here that is completely finished now, I didn't do any of the work at this office space. I paid a contractor $150,000 or $160,000, and it improved the overall value based on the appraisal to $300,000. So really, in this process, I was up $150,000. So really, the biggest process when it comes to completing a commercial deal, or in this case, 2 construction commercial loans, is waiting for that appraisal. There are some banks out there that will lend based on the appraisal value. Now, neither of my situations were that case, but I'm gonna break that down for you guys. And what I mean by lending on appraisal is basically, in this case, I had to put either 20 or, on my cabin's case, almost 30% down in order to purchase the property. But not all banks are gonna need that. For instance, I'll use some even numbers here. If you want $1 million property, on the commercial side of things, it's gonna require 20 to maybe 25% down, but most of the time it's gonna require 20% down, which means you need about $200,000. That $200,000 does not include any kind of prepaid expenses or additional lender costs that may be associated. So let's just round up and make that 215 at $1 million. But let's say you're looking to do a construction commercial loan. You're looking to purchase that $1 million property for about 1.1. That additional $100,000 is what you're looking to actually be included into the loan, so you can use that to pay a contractor to remodel maybe an office space or a commercial building. So now your overall loan is no longer $1 million or maybe $800,000 if you're putting 20% down. The total cost of your commercial building is now $1.1 million. So instead of putting $200,000 down, maybe $215,000 with closing costs, now you're putting $220,000 down plus some closing costs, which you're looking at maybe about $235,000. So instead of $215,000, you've got to come up with an additional $20,000 with that $100,000 used as a remodel budget. But guys, you just got your appraisal. You got your appraisal based on that $100,000 worth of work that's going to be done. And now your appraisal actually states the value of the properties, not $1 million, not 1.1, but actually 1.3, assuming all the work gets completed. So this is a commercial construction loan now valued at 1.3. Now, again, this is not a stipulation or a situation that worked with either of my properties. It's not the route I decided to go because I had a 1031 exchange on both of these situations. So I just applied the funds to the purchase. But let's say the value is now 1.3. Now, bank is still going to lend on 20% of the overall value from the appraisal. So the bank's gonna lend you $1,040,000 instead of the initial amount. So now with the bank lending you $1,040,000, your all-in total cost is $1,001,000. The bank's lending you everything but $60,000. $60,000 plus closing costs, you're looking at maybe $70,000 to $75,000. So now you're purchasing a property for $1.1 million that's worth $1.3 million, and you're only putting $75,000 down rather than close to $250,000. Now, obviously, this will vary property to property. Some cases, you're going to have an even sweeter deal than that. Sometimes you're going to have to put a little bit more. But even if you're putting $100,000 or $150,000 down, it's way better than having to put $250,000 down. That extra $100,000 or that extra $150,000 could be applied to another investment of your choice. Now, the one downside of this is, yes, if you have a larger loan amount, your mortgage is going to be higher. But I can tell you right now, I'd rather have $100,000 in my pocket right now, ready to invest in my next investment, than having a little bit higher mortgage payment over the next 20 years. So I know I covered a ton in this video when it comes to commercial loans, commercial construction loans to be specific. Now, if you have any questions, because certainly I wish I had someone to approach or ask questions in this case, a lot of this YouTube channel is me going through things that I don't necessarily know what I'm doing, but hoping to educate you guys once I'm done with the process. That way you can watch these videos and learn from a lot of the mistakes that I have made. So if you do have any questions, make sure to leave them down in the comment section below, or you can reach out to me privately via Instagram or via email. That will be in the description as well. But I appreciate all the support, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.